Hello and welcome to Views from the Market, mid-market private equity and M&A in Canada. My name is Mario Nigro, and I'm a partner in the private equity and M&A group at Stikeman Elliott. For today's podcast, I'd like to welcome our special guest, Senia Rapisarda. Senia is the Managing Director and Head of HarbourVest Canada. Senia, thank you for joining us and welcome.
Thank you, Mario. It's a pleasure.
Senia, we always start the podcast by talking a little bit about yourself, your own history, your work at HarbourVest, and HarbourVest itself. So why don't we start there, if that works for you?
Sure. So, Mario, you and I share something in common. We're both originally Italian. And I have been in Canada for the last 15 years. And before I was in the UK and in the US. And of course, in Italy for the first 22 years of my life. So I've been at HarbourVest now for 12 years, and HarbourVest is one of the largest private market firm in the world. It's global. We have offices in 15 different cities, and I opened the Toronto office in 2014. HarbourVest, as I said, is one of the global firms. We now manage over 150 billion, and we invest in companies, we invest in funds, we provide liquidity through secondaries, we do credit and infrastructure.
Senia, HarbourVest has a rich and long history of investing in Canada, different verticals, different elements of the market. Tell us a little bit about HarbourVest's investments in Canada, its kind of history in Canada, some of the work you've done over the years, because we've seen HarbourVest on, I know even me alone, I've seen them on many cap tables in many different capacities.
So that is true. And HarbourVest has been investing in Canada over 2 decades. But since we opened the office in 2014, and we were the winners of the first program called VCAP with the Canadian government, basically enticing private sector investors, and very successful so, into venture and growth equity asset class. And then we have been renewed for a second and third program. Before those programs, HarbourVest had been investing in some companies, but not in funds. Since then, in the last decade, HarbourVest has been investing over 1.2 billion in Canada. And this has been really an exciting exposure for us. Something that, notwithstanding the firm is based in Boston, but it's global, Canada was always a location in a country, of course, where to find talent and great companies. But I think to the surprise of everyone, we saw what incredible number of talented entrepreneurs, talented companies, and investment could be done. So we've been very, very active in the last 10 years.
So you tell us a little bit about the sweet spot, the kind of investments you look for in Canada, what you've done, a flavor of what HarbourVest focuses on in terms of its investment strategy.
So from an investment point of view, of course, we are agnostic globally. But Canada, especially because it's venture and growth equity, that is our 3 mandates that we are now executing, obviously is more skewed towards technology and life science. So I would say the 3 main pillars are tech and software, obviously, where Canada has a great tradition. And of course, then we have the component that is more the climate tech and the former clean tech and life science, which we should not absolutely forget. Some of the most interesting liquidity events in the past 2 years have actually come from life science. And when in a situation where you have, like right now, I'm sure you know, Mario, that especially being in M&A, liquidity has been a big issue all across the world. Globally, the last 3 years have been probably one of the driest years in terms of liquidity and what we call in lingo DPI. And that has created a little bit of misalignment at this point with different LPs and issues in private markets. That's when diversification really matters. And while our portfolios, of course, have a lot of tech, having actually life science has made a huge difference. 2 fantastic companies, Canadian companies, actually have been sold in the past 2 years. Do you know which one?
No, but you're going to tell.
One has been in Versago that has been sold to Novo Nordisk, which is the company that, of course, has created Ozempic. So our own homegrown company based in Montreal has done a similar compound. And the other one is Fusion that has been sold to AstraZeneca. And those have been sold in billions. And billions is what matters because I have nothing against M&A. My job is to create Canadian champions. But when we sell, I want the company to be sold to a really meaningful valuations. So the company usually stays in Canada and continue to create wealth for their shareholders and for their employees.
And so in terms of your strategy in Canada? You do minority positions, you do majority positions. What's your average check size? Is there a flavor to the kind of businesses in terms of size or check amount or capital you want to put to work? Or are you looking for ones where you could do add-on? I mean, like, what's your sweet spot when you look at deals in Canada?
So, as you probably heard from me at this point, I'm a big fan of diversification. So, our three mandates that we are implementing together with the private sector and the Canadian government are venture and growth. So, by definition, they are minority, and we invest in funds and we invest in companies. On the fund size, we depend on the stage. We invest in seed, in a Series A, Series B, and late stage venture, and of course, growth, or what we call growth buyout. And ticket size depends on the size of the fund itself. So usually we try to calibrate it to the fund size. I would say probably between $5 and $15 million, sometimes a little bit higher over different vintages. In companies, we are in a privileged position to be able to source deal both from our Canadian managers and international managers, mostly US, but international. And at that point, we kind of wait until companies are a bit more advanced. No technology risk. We take market risk and kind of development risk at that point. So I would say probably ARR of $5 to $10 million. So the company is viable, is selling the product, we are expanding. There are many in Canada. And one stats that has always astonished me has been that many of the large tech recap or company that had been kind of bootstrapping at that point, 90% was done by international investors, mostly Americans. Now, that we need to change, and that's what I'm delighted to change, is we need to bring growth capital to companies to grow, and that is a very exciting stage that I think everybody in Canada now recognize we need to double down.
And I wanted to follow up and build on what you're saying. I mean, you bring a unique perspective. You came to Canada as an outsider looking, and now you've kind of embedded yourself in the marketplace. But, you see the challenges, you see the opportunities, and you highlighted one of them that is one of the most obvious ones. And I see this with clients all the time, that they want to kind of sell or transition to a Canadian owner or an equity provider, and they just can't. There's just so little of it, particularly in the middle market. When you look at the Canadian marketplace, what would be the highlights, the positive, but then also the challenges, the things that we need to work on?
That's a great question. So first of all, I want to draw a comparison with Europe. Canada, in a sense, is similar to many European countries, meaning very fragmented. When I start getting to know the Canadian market, I was astonished to find out that over 90% of Canadian companies are less than 10 employees. So they're small, fragmented. And there was a sense of complacency because, we were sitting on top of one of the largest markets, the US. So the necessity to really diversify, go abroad even more was not necessarily felt. You had one of the biggest markets just out. Things have obviously changed. So what has changed is, first of all, the market and where to export to. But what has changed more, I think, is the desire to own the podium. So before, let me explain, an entrepreneur would sell the company, sell it maybe for $50, $100 million, and think this was a great success, and then leave and maybe not come back. And the lack of repeat entrepreneur was something we needed to change. And that has changed in the last 10 years. I've seen many entrepreneurs going to the Valley and staying in the Valley, and now instead a desire to come back to Canada and repeat successes is strong, and also build much larger company. And so that, I think, it's a positive. Clearly, the geopolitical situation is encouraging and kind of pushing us to really finally, as I said, on the podium, kind of disconnect, consider the US a strong market, but diversify, and be able to really build the companies on our own. What can be challenging is, of course, we do have this issue of productivity. Since I arrived in Canada, people were always complaining about the fact that Canada was not that strong on the productivity side. I think there have been changes that have been made between provinces and opening and creating logical and easier markets, and people just qualification be recognized. So a lot of friction seems to be in the process of being reduced. From an M&A point of view, I think that is the only way to go, Mario. And I think for you, this is a continued business. It's going to go on and on and on, because unfortunately, the path to IPOs it's really limited to very few names. And it will continue. The window for IPO is a little bit open in the US, but it should only be reserved to company that can really be of a market cap of billions.
Senia, when you look at the year ahead and the year that we've had, it's obviously been a tougher year for growth and venture. There's been some kind of pullback from the kind of type of investments and number of investments that were made years past. Where do you think the market's going? I mean, obviously, there's still some, from a Canadian perspective, these tariff questions. There's some uncertainty in terms of the fundamentals to the economics. But when you look at the marketplace now in the year ahead, and from a HarbourVest point of view, where do you see the opportunities in the year ahead or the trends you're seeing in the market?
So clearly, I'm lucky to be in a firm that has so many different tools in the toolbox. And the velocity at which private markets are changing is incredible. So it's not only the technology, whether it's AI, whether it's CRISPR, but it's also the way to fundraise. And we can discuss, I think it's a very interesting area, is how private markets now have been democratized and going into evergreen and accessible to retail, all the different advantages and dangers of that. But that is going to be an enormous engine of private markets. And the fact that, of course, there is a desire of liquidity. So secondary markets have continued to play a big, big role. And it's going to be probably the sponsor to sponsor and sell to on the secondary platform is going to be the way to create liquidity. Now, what doesn't make me sleep at night is I see some phenomenal companies, some in my portfolio, going for enormous valuation. There's mostly in AI, and they are doing excellent round with excellent names at billions and billions of valuation. And you start thinking, okay, how will this exit? Like, it is going to be an IPO for 400 billion or an M&A of that size. So that is becoming a little bit like the certain end of the market is really, I don't want to say high in terms of valuation, just I don't think we've seen ways to create exit at that level yet.
In your practice, Senia, obviously the influence of AI is affecting us all in all aspects of M&A. I wanted to get a sense from you in your practice, how you're looking at AI, and both in terms of the kind of opportunities you look at, and then also in terms of your own portfolio. How are you managing the impacts of AI, both from an opportunity perspective, but also from a maintenance perspective in your portfolio?
So we have slice and dice it. And of course, we have, again, the privileged seat to read some of the best top VC firms, what they think about AI. I am old enough to remember both the internet and the mobile revolution. And at the time, I remember seeing funds that were just mobile, or funds that were just internet. But in reality, those are tools and they go all across different industry. AI, more than ever, continues to be, for me, what is going to be winners is when there are transformative tools to improve efficiency across industries. And I see that in real life. I'm sure all of us are pretty astonished of how AI is simplifying some aspect of our lives. I think in healthcare, which is one passion of mine, I can see in digital imaging, I can see in diagnostic AI being an incredibly benign tool. But on the other hand, Mario, I have to tell you, listen, I've been in tech long enough that sometimes I look around and I think, as technology going too far, is it creating problem for democracy? So what can AI do in certain subsector? That worries me, and that I still need to learn. I think what is happening, all of us, we need to learn every day. As I said, again, I'm going to use the word velocity once more, because things keep changing.
Senia, you focus on the Canadian market, and when you see obviously some of the tariff impacts, we've already talked a bit about the disentangling, I guess, in some ways from the US. You see some of the kind of forces that are affecting the Canadian market. And obviously these forces bring some negatives, but they bring some positives. When you look at 26, seeing anything specific that you're focused on from an M&A, from a growth, from a venture point of view, particularly for Canada?
Obviously, right now, we do not have tariffs on software. I say obviously, but it's not that obvious because that could change overnight. So that is a big point right now. I think CEOs, entrepreneurs have had time to diversify their supply chain. And obviously, a tariffs on software would create issues. Everybody is creating a plan B and a plan C. And we really, exactly like we did with COVID, we did a portfolio bottom-up analysis, and that's what we do with our CEOs and with our fund managers. We just do every scenario we can think of and where to find the potential new customer or the potential new supplier. So I think on that, Canada is, at least in my industry, quite ready. Obviously, other industry will be affected more. From an M&A point of view, I'm seeing a lot of movement now. I'm seeing in our portfolio many of the best companies being chased. So it's a bit of a tale of two cities, Mario. I think that there's some of the best company will definitely find buyers at very appropriate valuation. The one that I think they're suffering are the one who are good company, but not extraordinary company. And those, we're trying to see how much capital left they have, how to make them profitable as fast as possible, because it may be a long wait before they become interesting for M&A, unless you are really in the eye of a platform player. But I don't think you will get the price you want. So what about you? What do you see? I mean, do you see the same? And I know you're talking to me.
I definitely would. Well, I think it's hard to do any deal until the tariffs are settled. I think it's hard to do any deal cross-border manufacturing or chains. I think, like you said it very well, there is a race to buy the best companies, and those are getting crazier premiums than we've seen in the past. So if you're actually getting a kind of almost like a bonus on your exit because everybody's chasing those really good assets. So to your point, the top of the stack is getting really, really aggressive in terms of what people are willing to pay. But on the other hand, whereas it was a lot easier to sell, exactly like you said, those kind of mid-tier kind of companies, good companies, not great, those are getting harder to sell. People are cautious, they're hesitant, and they're a little bit more hesitant also on valuation. So I agree with you. You read it very well.
But I am excited more than ever. I think we are in a perfect storm in a positive way. I think in the last 12, 14 years, we've been building relentlessly a good ecosystem of players, many funds, all across the board in terms of industries and stage. There is definitely an awareness among the public, which is important to me. I always feared that Canada would see technology and venture as just limited to a certain elite or making rich people richer. And it could not be further from the truth, because knowledge-based economy actually distributes wealth. And companies that are in that space can be really interesting way to keep our talent home. And I see this now becoming a priority, and that's very exciting. And I think we now have the talent. We can attract phenomenal talent and keep it. And I think the next 5 years, if we play it well without panicking the immediate kind of economic shaking, which is going to happen because, of course, everything is happening right now, it will have an impact. But Canada can really emerge as a very strong leader.
I agree with you. We're at a crossroads in Canada. This is an opportunity that if we do it right, we'll look back and say we made the right decisions. But it's your point. But if we don't do it right, this will be the moment that people will look saying we made the wrong decision. So I'm hopeful as well. I'm with you. Senia, thank you so much for joining us. It's been great to learn about your history and appreciate all that you do at HarbourVest, and obviously appreciate your support for the Canadian ecosystem and both on the venture and the growth side. So thank you for joining us. Thank you for telling your story.
And Mario, thank you for having me. This has been a real pleasure.
Thank you for tuning in to Views from the Market. Stay updated with the latest episodes by subscribing wherever you find your podcasts or visiting stikeman.com/viewsfromthemarket.